Hello, this is Robert. I'm a tax attorney here at TRP, and we're going to be going over how to stop wage garnishments from the California Franchise Tax Board. So, what is a wage garnishment? It's pretty much an order issued by the California Franchise Tax Board to your employer if they see that you have a delinquent debt, you haven't done nothing about it, and they're just going to take the money. In an FTB wage garnishment, the FTB will give them the right to take a percentage of your income. The FTB considers balances from taxes, penalties, fees, interest, and non-tax debts owed to government agencies and courts as basis for the garnishment. Now, we're not covering how to release it if it's a child support order or something like that. You should call a family law attorney. That's going to be a separate process. What we're covering here is how to get it off when you have tax debt. So the FTB sends a request to your employer to withhold funds from your paycheck to pay the back tax debt. So how much can they take? FTB can garnish up to 25% of your disposable income. That's pretty much after your federal income tax, Social Security, state income tax, state disability, what you got left. They can also calculate the garnishment by the amount by which your weekly disposable earnings exceed 40 times the state hourly minimum wage. So here's an example. You get $12 an hour, you work 40 hours a week. Weekly wage is $480. After deductions, your weekly income is $460. So, and we're just guesstimating that and then going with 25% of that 460, 115.50. That's what they're going to take. So 25% of what's left over. They're not going to take any more than that. They might hit your bank account too, and that's a separate issue. But there are cases when the FTB modifies the garnishment amount. There's sometimes where the payment can't really always, a payment plan won't always release the garnishment. If you had payment plans and they've defaulted before, sometimes the best thing you're going to get is modifying the garnishment or doing a hardship or something like that to get the garnishment off, which we'll discuss in a little bit here. So how does an FTB garnishment take place? They send an order to withhold. First, they must send notice to the employer or business entity, and the notice to garnish wages should contain the following information: nature of the garnishment, the amount, and a summary of how it was derived, a statement indicating your right to an exemption in certain circumstances, and instructions on how to claim an exemption. So that when you get the notice, there's an opportunity for a hearing too. You should get notice about it. You can request a hearing and try to do something. However, if they're right about the debts, it's easier to just try to resolve it right away. And that's generally what we'll do. It's just easier than trying to go through the hearing process, and it's going to be faster a lot of the time. In any case, the order of withhold was sent to a financial institution like a bank. So if you get this, then it's technically a bank levy. If you get that, they have to hold it for 10 days. And during that period, you can try to claim hardship to get the money back. But it is pretty difficult to do that. So FTB isn't always right. Sometimes mistakes are made when sending out a notice of wage garnishment or a bank levy. When you receive the notice, take a look at it, make sure what they're charging you is fair. There are times where FTB will come up with its own balances that make no sense. I've seen a client who was living in Korea and got a garnishment, and actually that was a bank levy. He got a bank levy, and he wasn't even there. And people move, and because they had a professional license in California, they still assess them a debt, and someone could be working in another state, have nothing to do with California, and then they still get that. And you need to make sure you set your address if you have a professional license to an out-of-state address. That often will fix it. And otherwise, California just sends you debts in the mail. And sometimes they just have to be fixed. Once you realize that wages are improperly garnished, you can contact them and have them fix it if it's not being properly garnished. That's not always the case. Most of the time they're garnishing, it is right. But if you haven't been there forever and getting garnished, there's a good chance it's just wrong. So an FTB lien might also have been filed. So the FTB files a lien in the county in which you live in on any property or vehicles you own. It might get picked up by credit reporting agencies as well. We're going to have a page on franchise tax board liens. You can see that below, and that'll give you some more information. So what can you do to stop the garnishment? File for bankruptcy, file for hardship status, get it approved, file for an FTB offer and compromise, get it accepted, set up an FTB payment plan, or pay in full. And here's a note on the offer and compromise. We're almost always going to do a hardship first to get that garnishment right away. You want to get it off, do the hardship, then you do the offer and compromise. Otherwise, it's going to take a while to get that off, and you get hit for some paychecks. So filing for bankruptcy. So this option is good if all you have is really a bunch of other kinds of debts. Not all you have. If you have a bunch of other kinds of debts, filing for bankruptcy is a good option. If tax debt is your only debt, filing for bankruptcy probably is not your best option. Bankruptcy lasts longer on your credit. and everything gets liquidated. If you do a Chapter 13, it's a little bit different, but filing for bankruptcy is usually not the best option unless you have tons of other debts. So you want to look at the alternatives if it's the best for your situation. If you're not sure, you might want to talk to a tax attorney. You can give us a call and talk to a bankruptcy attorney and look at both. Keep in mind, some debts are not included in that bankruptcy. Sales tax, payroll tax, they're not going to include it in bankruptcies. So once you file for bankruptcy, collection activities will stop, which means your wage garnishments will stop until the bankruptcy process is complete. But it's just not always the best option. If you qualify for a bankruptcy, a lot of the time you'll qualify for offer and compromise, especially with FTB. If you're like over 50, you're a little older, they're a little more lenient on you. If you're younger, there is a chance you might get a bankruptcy and not an FTB offer and compromise. And it actually happens where, clients will IRS and FTB, and we always inform people of this, but it happens where you get an IRS offer and compromise because they'll accept it when someone's 25, and FTB might say, you're too young. We think we can collect. So we'll wait. We're not going to accept an offer. And maybe they'll just accept a hardship or something if the finances are low for now. Oh, and actually, I should mention this as well. Priority debts, even though we're not handling that, child support, alimony, that kind of stuff, those garnishments do continue during bankruptcy. File for hardship status and get it approved. So filing for hardship status can stop the garnishment if the hardship is approved. This is approved if you can show that you need the money to support yourself or your family for basic necessities, and the garnishment would prevent you being able to cover basic expenses. To file for hardship, you or your representative need to contact the FTB collections area or the individual assigned, and you're usually going to have to fill out a financial statement, which is Form 3561. If you don't got a rep or you need help, you can just call us. If you don't have a rep or you're not sure where the case is assigned, that's handling it and you're trying to do it yourself, call 916-845-4470. Again, that's 916-845-4470, and they should be able to redirect you. You can also call us just to handle it all for you if you don't want to deal with it. And the hardship's usually good for a year. So FTB hardships, I have seen them when a case was assigned to somebody individually only be for 6 months, but generally they're going to be for a year, and you have to renew it. IRS has something called currently not collectible status. It's very similar, but IRS will automatically renew it based on their own data. And FTB will make you manually renew it. So FTB cases can go on longer than IRS cases if you just keep putting it in hardship every year, but you're not really getting an offer and compromise. The FTB also has 20 years to collect on most cases as opposed to IRS's 10, and the FTB finds a bunch of different ways to try to extend that 20 years in a lot of cases. Some of those are a little bit even questionable that they're doing it, and you may see some lawsuits in the future on that whole collection statute issue with the FTB. Another way to settle your tax debt with the California Franchise Tax Board for less than what you owe is through offer and compromise. So just filing an offer and compromise, sending the mail isn't going to get your garnishment released right away. And that's why we recommend it's better to go ahead and file for a hardship first. You file for the hardship first, you get the garnishment released, then you send the offer and compromise. That's how you do it in most cases. It's more difficult to get accepted than the IRS, but it's not impossible, and it happens. We've had a guy who owed $260,000, and the FTB accepted $500. Ability to pay is going to be based on current finances. That's the thing you're going to look at. So they're going to look at the end of the month, income versus expenses. Do you have anything left over? If you're living in a $1 million place and you don't have anything left over and you're barely making it, that might not be good enough. But you're living moderately and you're not making it, that'll do it. We even had clients that they make fairly good money, but they have they have 4 kids, 3 kids. There's people that make, $150,000 and they have a lot of kids. They might still get a settlement. They're also going to look at the total value of assets, including real estate, vehicles, and retirement accounts. You got more assets than the tax debt, probably not going to be getting an offer and compromise. So current and future, they're going to look at the future. Is it going to go up? Is it going to go down? Whether it's in the state of California's best interest and your age. The younger you are, the least likely you are, they're going to accept it. Another thing, California does have contingent agreements where, if you make so much more money after so long, we might take more. Most of the time, they're not doing those, but that does come up sometimes. So you may see that. Feel free to read our guide on submitting an FTB offer and compromise. We'll also post that below. And although it doesn't resolve the tax debt, although an offer will resolve the tax debt and eventually take off the garnishment, definitely do that hardship first in most cases, so you get that levy released faster. So you can set up a payment plan. If you can't pay your full right now, you can do a payment plan. They do charge a little fee. There's penalties and interest. And there's kind of two types of payment plans here. So first off, you get a hardship, that already shows that your ability to pay is zero. So you're not doing a payment plan. And if you can barely pay any per month, offering compromise still might be a good option there. And sometimes you'll do a small payment plan and then submit an offer compromise just to get the levy off right away. But the FTB kind of has two things here. And the IRS is a little more standard on 72 months or 84 months to not get a lien. The FTB sometimes will tell you 12 months. But typically your case will have a certain amount of time period in which you can pay it off. And if you pay it off in that time period, you won't get a lien if there's not one already filed. If you need to do something other than that, they're going to make you do a financial statement. Like if you want to pay less, but you're not quite a hardship still, and even if you are a hardship, you can use the financial statement, and then they're going to most likely file a tax lien against you as well. So paying in full. You pay it in full, that's it, you're done. The garnishment will come off. It is better to let the FTB know that you paid it in full, and I would even maybe fax in a receipt if it's not showing on their system right away, so they release your garnishment faster, because it's possible you might miss a pay period still, and they're still going to garnish the next pay period because sometimes one hand doesn't talk to the other fast enough, and you're waiting for stuff to process. If they overtake the money, you should get it back in some form, in a check at some point. And if you don't, call them after a while. But if you're paying back more, you paid it off and then you still get garnished after, that money, any extra money should be coming back to you. So concluding our guide and stopping FTB wage garnishment, the best option for getting off an FTB wage garnishment is dependent on your financial situation. At our firm, if we can use a hardship to get the garnishment off quickly, then submit an offer, that's pretty much what we're going to do. If the offer has a high chance of acceptance. If you're not sure what to do, you can just give us a call, 888-515-4TAX. That's 888-515-4829. Or you can just go to our website at trp.tax. If you're doing it yourself, still do something. Don't just do nothing. Check out our guide at trp.tax/tax help. I always tell people, don't wait until you make more money to hire somebody. If you're going to hire somebody, have them do it. That's great. Have us do it. We'll get it done. But if you're not in a financial situation to do it, good chance you're a good candidate for a settlement still, because you're not making that much money. So, look at our stuff, get it in, and don't wait forever. Thanks for watching, guys. Have a great week.